Hi everyone, it's Phil C here with you, and welcome to the first edition of the Start Trading Overview. And what we are going to do today is take a look at some potential opportunities so we can follow along together inside the markets over the next coming week. And if you've been working with me inside the Start Trading community, you will know that one of the favorite trades at the moment is the trend continuation trade. And what I've done is I've put together, I spent a lot of time, effort and energy putting together a free training for you. So you know how to identify this trade, how to trade it, so the entries, stops and targets, and how you can go and use it for yourself and start profiting from it from the live markets as well. That way we can do it together alongside one another. And the reason why I put this together is this strategy is responsible for pulling about 400 pips from the markets. So it's really good. And it's one of my favorite trades because it's simple to follow and simple to execute. If that's of interest to you, and you want to trade that and start profiting from the markets yourself, just head on down to, where is it? The description below. Click on the link and have access to the free training there. So you can start using it too. I appreciate you being here and spending time with me. So please subscribe and also hit the like button as well, so you can help me with the algorithm and try and get this video out to as many people as possible. Let's go over to the charts now and bring about some clarity to what's going on inside the markets. All right, let's go. All right, so here we are at the charts right now. And the first thing that I want to look at is on the Euro Yen. And everything that I'm going through right now is on the daily time frame. The reason why I'm on the daily time frame is it's going to give everyone plenty of time to go and look at these trades as well and continue to follow along with me with everything that we're doing. Now, yes, I can see that it's already played out, right? But this is a textbook example of a trend continuation trade, and I didn't want to skip this. It's a good demonstration of what the trade is, what I was talking about at the start of this video. So as you can see, price action came up and closed above this level right here. So where is price action most likely to retrace back into? This previous level of structure, okay? Price action comes all the way back down into this level. So this would be our buy zone right here in this blue box. And we can see that price action did get a little bit more of a move towards the upside here. Had another pullback right back down into this structure level. And then finally we get a move all the way towards the upside, hitting target ones. Now, everything that I do trade is of two targets. So I want to use this as a demonstration of where is target 2. So if we hit target 1, where are we coming off with the other half of our trade? And that's where we use Fibonacci extension tool, right? So if price action does move towards the upside, if we do break towards the upside, where is it most likely to go to? That's why we use Fibonacci's. So I'll grab a Fibonacci extension tool and I want to go from this low right here to this high right here. Okay. So we'll go from swing low all the way up into swing high and back down in. So that gives us an extended move, an extension all the way up into the 127. So if we do get an extended move towards the upside here, we want to know where is price action most likely to terminate, right? Which is right here. So that is where our target 2s would be. Where is this? So let's duplicate this, move it to the side. Target 1, previous retest of the highs. And now we got target 2 all the way up into, let's say right here, 152.820s. So now we've got a 127 Fibonacci extension. Again, if price action moves towards the upside, if we do break towards the upside, that is where you would want your target 2s to terminate. We take off the balance of the position there. So because it's 2 targets, after price action does hit target 1, you want to take off half of the position and roll your stops to break even, like this. Because if price action does come all the way back down into this level, then we want to get out of the position and then continue to wait and be patient for price action to set up our next trade opportunity. We don't want to force anything from the markets here. We want to be patient and wait. So we want to wait for price action to come to us. I always say that you never want to force anything out of the markets. You look at something long enough and you're going to find some reasons for entry in practically everything that you're looking at. But we don't want that. We want to follow our plan with discipline, right? Because we know that our plan produces a positive expectancy. Our plan that we have and we trade every single day gives us that edge in the markets. And with an edge, we can consistently be profitable. So we want to wait for price action to come to us in the form of hitting our rules, right? So everything that I trade has a case for entry. And that case for entry is what I've backtested. So I know my numbers and I know that I have an edge. So if I force things in the markets, then I'm going to deviate from that plan. And it's not going to end well. Eventually, I'm going to be donating back to the marketplace. So I don't want to do that. I want to continue trading my plan with discipline. To do this, that's why we wait and we be patient. We wait for price action to come to us. So price action will tell you what to trade. So when price action does hit your criteria, then you can buy or sell depending on the strategy that you're trading. So it's important to wait and be patient because at the end of the day, patience pays. This is EURJPY. It's just a quick example, textbook example of the trend continuation trade, right? What we were talking about at the start of the video. Again, if you want the rules for this trade, just head down into the description there and you can have a look there. Let's take a look at the next opportunity on the pound yen. Catching up with the pound trade. So we had a move towards the upside here. Dropping a line tool right here. Looking left. Okay. Always want to look left for structure. Right. So structure right here. Let's get rid of that. So as price action comes up into this level, we get a rebound from there, giving us again a nice trend continuation trade setup, just like we looked at on the euro yen. So pound yen right here. So you had a buying opportunity right at this level. Okay. So back down in the structure. Why? Again, previous resistance becomes new support. Always looking at structure. Price action comes up, we get a pullback, and then we get another move towards the upside, closing above these highs. Okay. Once we close above these highs, giving us a higher close, then we get price action pulling back into previous resistance is now new support. The significance of these structure levels is this is where you want to look for your trading opportunities. This is where you want to look for your buying and selling opportunities because they give you the best probability in trading. Understanding these levels is going to give you really good trading setups in terms of risk to reward. Okay, previous resistance, new support. This is where we're looking for buying opportunities. Where are our targets? A previous resistance right here. So again, the same thing plays out, right? We're going to move towards the upside right now. So again, we're live. Well, market's closed, but live. We have a move towards the upside, closing above these highs right here. This gives us a higher high, higher close. So we keep following this until proven otherwise. We keep trading the trend. So we're in a bullish trend right now on the pound yen. We keep trading the trend until price action proves us otherwise. What does that look like? Let's take a look. If we get a move all the way back down into previous resistance is new support, and then we're going to move towards the upside, and then breaking above these highs again, that pattern, every time this pattern keeps continuing, we are continuing in the trend, right? So the trend continues. Price action pulls back like this, and then we get a move all the way down, and then we close below these lows, looking left. Well, then now this signals to us that we have a violation of our previous low. Price action is now indicating that it wants to head down lower, right? Because we don't get a close above these highs right here. And then we get a move down, and then we get another move down, and then we close below these lows right here. When price action does this, it's proving to us that there is a change in direction. There is a change in trend. But we don't know that ahead of time. So we have to continue trading what we currently see until price action tells us otherwise. And that's why you use stop placements. That's the significance of using your stops correctly. So if we take a look at this, we have a trend trade setting up here. Previous resistance becomes new support. If price action pulls back all the way down into here, we want to look for long opportunities, right? It's not going to give us the best risk to reward here. Right here, because I would want my stops below where I'm talking about, below these swing lows. Okay, let's make sure our target's right here. So this isn't giving us a good risk to reward right now. We need price action to pull back all the way down into somewhere where it's going to give us, somewhere it's going to give us a 1.5 risk to reward. Okay. So this, anywhere within this level is a buy, okay? Anywhere in between previous resistance and support down here is a buy. This is your buy zone. So technically, anywhere price action pulls back into this level, we can look for a buying opportunity with the trend continuation trade. Now, if price action continues to move towards the downside, and we get a move below this low right here, we want price action to hit our stop. That's why it's stop placement. That's the significance of stop placements, right? We know we are wrong on this trade. So we want to get out. That's why we put our stop there. Okay. So if price action does move below these lows, then most likely we'll get a pullback back up into this structure level and potentially a move towards the downside. So we want to get out of the markets here, not all the way down here. Okay. But we continue trading the trend. We continue following the plan. We continue executing our rules. Because we don't know the future of price action. That's why we want to play the probabilities. That's why we continue trading a strategy until price action says, you know what, we have a change in direction. So you trade what you see. And that's the significance of stop placement. Continue to trade your plan, continue to trade the trend until price action tells you otherwise. And if that does happen, what do? You be patient and you wait again for price action to put in the next setup for you. Okay. So that's pound yen. I expect price action, or I predict price action to pull back into here. We may continue to move, keep going up here, but we'll continue to watch and see if there's any potential probabilities that come from pound yen on the daily time frame. Over on dollar yen, I have some drawing here already. All right. So price action continues to move towards the upside here. Like this, we get a retest of these highs. Right here, we get a pullback. Okay. Pullback into this level. Should get rid of these actually. And then price action puts in one of these. We get a new structure high. Okay. Closing above these highs right here. And what we expect to see is price action coming all the way back down right here. And then we may get a move. We may get a continued move towards the upside following this repeated pattern right here. Speaking of patterns though, what I'm more interested in looking at on dollar yen daily time frame is a potential, not a potential, currently in it. So we have a move like this. This is my impulse leg. Fibonacci retracement, swing high to swing low. Now I get a 618 at a B point here. And what I'm looking at is an advanced pattern. So we get a B point at a 618 and a C point at a 6182. So we have a 618 and a 618. This is a W formation. So B point here, C point there. And then the CD completion of a Gartley pattern, because that's what this is a Fibonacci extension tool from swing low to swing high, and then back down in like this. And what we can currently see right now is we are live. Right here, CD completion at the 127 Fibonacci extension, completing this, I might as well use the triangle tool. Oops, completing this Gartley pattern right here. Didn't mean to delete the extension. So triangle tool, X to A to B, and then B to C, and C to D right here. So we have a Gartley pattern opportunity on dollar yen right now. So because it's already hit the 127, price action has a rebound from this level. We might get a double top, which also gives you a second chance for entries, assuming that price action hasn't hit target 1 before you have a double top at the D point completion here. So speaking of targets, where is that? So with the Gartley pattern, we have targets at a Fibonacci retracement from our from our A all the way to D, full leg of the move, okay? Swing low all the way up into swing high right there. Like this. And target 1 for a Gartley pattern is right here at the 382. So you'd be looking at a trade like this. Entry at the 127. Stops above the swing high. Your X point looking left, okay? And then your targets are at a 382 right there. So that's a 2-to-1 for target 1. Copy and paste that. And target 2, while we're at it, is at this 618. Right, so this is a very, also a textbook trade right here. So this is a good opportunity on the dollar yen. Really good risk to reward for target 1, over 2-to-1. And then on target 2 is 3.5. So really good opportunity. Now, as price action hits the 127, we immediately bounce off from that. It's too late to get involved in the trade, unless, this is a second chance entry, unless we get a double top right up at this level, right? So if we get, this is more of a conservative entry. It depends what kind of trader you are. Are you an aggressive trader? Do you sell immediately at the D point completion? Or do you wait for double top or double bottom? Are you more of a conservative trader? Right. So if you're an aggressive trader and you sell at the 127 and you've backtested this and you've missed this opportunity, all you would have to do is wait for price action to come up into this level right here again, and then you can sell, right? Assuming that price action hasn't come down and hit your target 1. If it hasn't, and we do get a move back up into this, you can immediately sell towards the downside, right? Because that's a valid trade. Now, if you're more of a conservative trader and you have to wait for that double top, then you would have to wait for price action to come up into this level and wait for the candle to close, giving you a valid double top, and then sell next bar market into target 1 and target 2, right? Again, depending on the type of trader you are and what you've tested, right? Make sure that what you were trading, you know, works for you, okay? So we'll leave this here and we'll watch the markets. If we do get a move back down into the 382, then you'd be looking at another trend continuation trade towards the upside, depending on what this market decides to do at the 382. So this is a Gartley pattern on the dollar yen. Again, daily time frame. Now over on the dollar CAD, we have another pattern opportunity here. We also have Fibonacci confluence as well. So if I grab this Fibonacci level from this high all the way down to this low, this is my impulse leg, okay? Fibonacci swing high all the way down to swing low. We have another 618 at our B point, and then we've come all the way down, hitting our 886 right there. So what we're looking for here is another move back up into the 127. So if I grab in my if I grab in my triangle, we have X to A to B, B to C, C to D right there. So just like we took a look at before, if price action moves all the way up into the 127, we have a D point completion, right? So this is a little bit of a ways away because we might get a move all the way down, closing below these lows. Then we might get a move up and then a potential move towards the downside. That can also happen too. But if price action does move from this structure level all the way, retesting these highs right there, and then we get a continued move towards the upside, we're looking at a sell opportunity right here. We're looking at a sell opportunity right there at the 127 for another Gartley pattern on the dollar CAD. That is all I have for dollar CAD. actually. Kiwi dollar, bearish. Where is our next stopping point? Price action moving towards the downside here. Closing below these lows, looking left. Previous support becomes new what? Resistance. Previous support becomes new resistance. And you can see from this candle right here, we get an immediate rejection. So price action moves all the way up into this structure level and then immediately gets beaten down, right? So there's a lot of selling pressure right there. As we get a move towards the downside, we have a new structure low. Now, if we get a new structure low, we look left, structure. Where is price action relative to structure? All the way down here, right? So I'm looking for a move all the way down to 0.59s. Because we have a new structure low right here, the next stopping point I'm looking at is our previous low right down here at this structure right there. So again, we might get a move all the way down here. If we don't, well, that's the next stopping point that I'm paying attention to. If we don't, we might get a retest of these lows right here and then a move all the way up into this structure level right here. Now, if we do get a complex pullback, you can look for a very nice selling opportunity here on Kiwi dollar, okay? Because you have a valid trend continuation trade set up right here. The problem that I have with it though is the risk to reward, right? So here's our previous highs, previous swing highs right here. And this is where my targets would be, right there, towards the lows. That is not a very good risk to reward. That's not something that I'd be interested to take. But again, if we have this low to this high, anywhere within here is a valid sell opportunity, okay? Anywhere within this box is a valid sell opportunity towards the downside because we had a new structure low. And the problem is the pullback is quite shallow right here. So previous support becomes new resistance. However, if we do get a deep retracement right back up into this level right here, we can look for a really good selling opportunity back down into these lows. Why don't I do that? So I want to get rid of this, get rid of this. Actually, get rid of that. If we do get that complex pullback, let's grab a Fibonacci retracement tool. We can get an even nicer risk to reward with a potential bat pattern setup. So the bat pattern terminates at the 886. Now this is a bit more of a future prediction because we haven't seen what price action does. But if, for argument's sake, if we do get that move to retest the lows, and then we get another move up, then we're looking for a sell opportunity at the 886. Now, not necessarily all the way back down to these lows, because if we do get a retest of these lows, then I consider that move already completed, right? Because we closed below this structure level, we had a pullback into previous resistance, previous support becomes new resistance. So if price action does move all the way back down and retest those lows, then that trend continuation trade is already completed. If that does happen and we get another move towards the upside and we get a deep retracement here, we can still look for potential selling opportunities in the form of a bat pattern. So consolidation right here. So X to A to B, B to C, assuming we hit the lows down here, then we get a deep retracement right there. So this at the 886 is a good selling opportunity to get a short out of the market. And it would look something like this. Now that, you know, that's a bit far into the future, I know. But if it does happen in that respect, then that's something that I would want to pay attention to. So that's my analysis on the Kiwi dollar daily time frame. That's about it. So we'll see what happens with this. The next stopping point that I'm looking at, again, just to quickly recap, is price action potentially moving all the way down to these lows right here. If we are continuing to be bearish on the Kiwi dollar. But other than that, I'd be looking at that bat pattern if we get a move towards the upside after the C point completion and then D point completion. Be looking for that sell. But that's it. Thank you so much for watching. Again, if you want the trend continuation trade, the rules of engagement for that, with identifying that trade and knowing the entry stops and targets for that trade, and then hit the link in the description below and get the free training and start using it in your own training. Your own trading. Training, I get those two words mixed up all the time. Start using it in your own trading for yourself and start profiting from the markets too. That will do it for this episode of the Start Trading Overview. Again, don't forget to hit the subscribe and please like it for me. Do a favor for me so you can help me out with the algorithm and get this out to as many people as possible. Until next time, be safe, enjoy life, and I'll talk to you soon. All right. Thank you so much.